Hi, everybody. Let me tell you something that nobody wants to hear. If you're still broke in crypto, it's because you're making the wrong decisions. You're trading on emotions, chasing pumps, and hoping for miracles. But here's the reality: poverty is a choice, or another way, poor is a choice. Well, wealth, on the other hand, that's a choice too. And in the next 10 minutes, I'm going to be breaking down the exact framework I use to build wealth in the crypto markets. This isn't theory, it's a mindset. The strategies and risk management and trading techniques that actually work. If you're done watching from the sidelines and ready to take control of your financial future, lock in. This is your masterclass. Let's get it.
All right, here's the first slide of our Pores of Choice, So is Wealth Crypto Trading Masterclass. We're going to squeeze as much information as I can within 10 minutes, give you as much value as possible. So my philosophy is that poverty is not a condition, it's more of a decision. And it's made daily, not only by you yourself, but the people around you. And it could be your coworkers, it could be family, your friends, as they say, you're the sum of the five people you hang around with. So, and it's all about mindset. So the poor mindset, waits for permission, blames the market for their misfortune, chases hype, exits in fear. And what I mean by that is they try to chase the next big thing, and they do not rely on technical analyses or order flow to make a proper entry or exit. uh, they're consuming nothing but content but never execute. So it's more of a mindset of paralysis analysis, and I'm playing to people that they know a lot about a certain topic, but they just never execute on it. And then lastly, they treat crypto as a lottery ticket and not a tool to build wealth. Now the wealth builder, on the other hand, takes the shot. As Michael Jordan once said, you miss 100% of the shots you don't take. The wealth builder, or the wealth mindset, owns every outcome, trades a plan, not an emotion, studies, tests, back tests, and execute the plan. You can study all you want or be in a paper trading account all day long, but it doesn't mean anything if you don't use live trading accounts and actually executing it. And then lastly, treating crypto like a business, because it is a business. It's your money, and what you do with it, it depends all on you. And then there's the mindset trap, of course. Why most traders, investors stay broke. 80% of retail crypto traders lose money within their first year. And it's not the market, it's a mirror of your emotions. And it people always say that, experienced traders always mention that the market's really just made up of people's emotions, and it trades off that. If I wouldn't even say you're lucky if you break even, but just the herd mentality, they break even at 13% and only a very small margin are actually profitable. So here in this masterclass, I'm going to give you the tools that you need to be that 7% profitable and rise above the rest. So yeah, stay tuned. And just like every strategy requires pillars. And in this case, my Pores of Choice blueprint, it's three pillars every wealthy crypto trader would stand on. So first of all is the mindset. It's about owning the outcome, relying on the plan, and just not relying on emotions. The market could go the opposite way if you planned it to, but if you just stick to the trade, stick to the plan, ride the waves, and then have a solid exit plan, you'll never have to worry about unknown outcome. Number two is your strategy. Just like the mindset, you need a solid strategy, some solid technical analyses, and trend line. Trend line strategy. It's repeatable with edge and clear entries, exits, and rules. Whatever you use, but it has to be solid and repeatable. And lastly, which I think is the most important, is Warren Buffett said it best: is rule number one, don't lose money, and rule number two was don't lose money. So it's all about managing a risk, surviving first, compounding second, never blow your account. So I personally never go more than 2% risk of my capital per trade each time, because I've in the past I've ignored that kind of shot from the hip and it's definitely blown up in my face. So there's that. Successful traders, they don't guess. They use the tools around them to actually make informed decisions to make that trade. So one of the tools I use, among many, I use TradingView. You got to read the price action, set alerts for yourself, and then you journal the setups, whether if it's a win or a loss. Second one, your tier one exchange. You got to check liquidity pairs, how much your slippage is, how much your slippage tolerance is, and then of course your secure custody. Make sure it's reputable, a reputable exchange with not history of shafting their clients or customers. Next one would be on-chain analytics. So Glassnode is great for showing people metrics and inflows, and same thing with CoinGlass. I'm not familiar with that. I've only used Glassnode, but it's a popular one I've heard others use. And lastly, just like I mentioned in the previous one, you got to journal your trades. Everyone, um, even your wins. If you made it A plus setup, log it, see what you did right, and then what you could do better the next time. All right, and so your daily stack is one, scan your macro and BTC dominance. Two, mark your key levels on the watch list. Three, define your risk before entry. That to me is the most important. Easy part is executing it, because once you have those A plus setups, you already know you're going to win, or at least you have a bigger probability of actually executing it on a positive note. And then lastly, your journaling is more like a debriefing, kind of reflecting what you did right, what you did wrong, review, rinse, and repeat. So when you're reading the market, there's four things you want to look for on every one of your chart. I'm going to use this one. It's a pretty generic chart. Let's pretend it's Bitcoin, and every denomination here on your left-hand side, it's in thousands. So we'll just use this and pretend it's Bitcoin. So first thing you want to look for is your support and resistance lines, where your price has reached before and where it might be reaching. Your trend, higher highs, higher lows. That's self-explanatory. Or even the opposite in the downtrend, lower lows and higher lows, or vice versa. And then your volume, your conviction behind the move. If you don't have conviction, then you don't have anything. And then your confirmation as far as the breakout goes and rejection. That's your decisive moment whether you need to enter the trade or exit. And with your strategy, you need an execution. So you have to enter with a plan, never enter a trade without a plan, and then exit without emotion. Once you hit your stop loss or you take profit, preferably you take profits, you really don't want to hit your stop losses, because that's really more of a safety net than an actual plan. You want to enter with a 1-to-3 ratio risk to reward entry. So you have to have your confirmation as far as your breakout goes, your levels plus your volumes, and no fear of missing out entries. Believe me, I've blown up accounts simply by fear of missing out on a parabolic move. Do not do that. And exiting, scaling out at your take profit one, then have a trailing stop loss if you need a break even. If it's again, it's more of a safety net. And then second, risk to reward, minimum 1 to 2, but preferably you want to go 1 to 5. That's your ideal situation, but risk to reward ideally is 1 to 3. And if it doesn't meet these requirements, skip the trade. Like I mentioned before, risk management is the most important, because you have to protect your capital. Without that, you have nothing. So I did put here never risk more than 1% of your account on a single trade. I recommend that for beginners only. I do 2%, sometimes 3 if I have a really good setup. So it's not based on position size, and not from the stop, not the gut. So on the chart to the right, the recovery task. So if you, for example, lose 10%, you to recover your actual losses, you need 11%. So let's go even further. If you are lost at 50%, you have to even just break even, you need 100% gain on that. So let that sink in. You have to win that much harder just to recover. Versus if you just stick to the plan, stuck to your risk management, you wouldn't even have to be in the position at all. You'd have a 2% loss or one, and that'd be your loss for the day. So risk management above all. So don't be this guy. In fact, this was me a few years ago. The 5 mistakes that keep you poor. So one, not trading without a plan, just going in because you have a fear of missing out. You have no entry, no stop loss, no target, no risk management, just vibes, and that's not the good mindset to be doing this, especially entering and trade, especially as a new trader. Two, oversizing the position. One trade, so don't decide your month. It's all about compounding wins and minimizing or at least controlling your losses. Three, revenge trading after loss. That's even the worst, where you maybe have two consecutive losses and you want to go for a further trade, a third trade to try to recoup your losses. Bad move. The market is never going to owe you anything, and it it's not guaranteed to give you anything back. Four, in chasing influencer calls or even Discord signals or signals from Telegram. By the time you see it, these moves are already over. These guys are calling the calls well after they've already executed it. So they're scamming you. I will tell you how to do it. I will never give out signals or calls because by the time I've made that move, the biggest moves have already been captured by experienced traders. And then lastly, no journal, no review. So you can't fix what you refuse to face. If you have consecutive losses and you don't want to journal them and actually look at what your mistakes have been, then you're never going to improve. So just keep that in mind. Just like anything in life, this is one of my other philosophies. Crypto rewards even the market in general, even if you're in stocks. It rewards the patience. If you're patient, it will reward you. Even in life, even if you're just a regular investor trading in index funds, if you're patient, the market will reward you. Granted, you lock in an S&P or some tech stocks, but it can't help you if you get into some speculative stock and you gamble away your entire fund. That's not what I'm talking about. And of course, it does punish the desperate. So people that go all into something speculative, that's on them. It's high risk and maybe high reward, but again, I don't like gambling, so there's that. So survive the cycles using TA, compounding the edge, so you get better over time, and then let time do the heavy lifting as far as your time in recognizing these trades, the setups, and then just getting better over time. Don't rush it. Your 7 steps start today. So, one, you got to decide. You got to commit to being a trader, not a tourist. Yeah, it might be fun for a couple of days, but then when you start to put skin in the game and you actually have to put your strategy in practice, this will weed out the haves and have nots real quick. Two, you got to fund, capitalize what you can afford to lose. So just ensure that you never go on a trade or even put money in your trading account if you're not willing to lose it. That goes with any investment, including trading. Trading is, I want to call it dynamic investing. Three, learning. Master one strategy before adding another one. I stick to one, which I've told you guys many times is trendline. It's worked for me and it's worked for other people before. Now, paper, as far as your step four, paper trading accounts, demo do at least 20 trades. Prove that your strategy actually works. Once you have consistent wins and more wins than losses, yes, then you can start with a micro trading live account with a really low denomination of money. Step five, risk. As a beginner, like I mentioned, 1% per trade always. Two, journal everything. Reflect, review, debrief. Just like in the military, you go on a mission, execute, come back, you debrief. Lastly, seven, scale. Add size only after 30 profitable trades. People get really cocky after 5 consecutive wins, then they'll start upsizing their trades or even adding to losing trades just to try to see if the the trend will reverse. It ends badly. Believe me, I know. But there you have it. 10-minute sub masterclass. It's your move. Whether you want to stay broke or not, it's your move. It's your decision. Or build wealth. I've given you all the tools. What you do with them, it's on you. Crypto won't wait, and honestly, neither should you. Crypto never sleeps. It trades 24/7. Again, follow me at Pores of Choice on YouTube, Instagram, and LinkedIn. And also go and join my newsletter on LinkedIn and go and check out my website for some really cool digital products on poresofchoice.com. Again, thanks everyone for joining me. Hope you got something from it, and I'll see you next time.
All right, well, there you have it. That's the blueprint. You just got in 10 minutes what most people learn in years of losing money. Now, here's where most people fail. They consume content but never execute. Don't be that person. Look at that 7-step action plan. Pick step 1, do it before you go to bed tonight. That's how you break the cycle. If you want more strategies like this, hit the follow button right now. Join my newsletter. You can find that on LinkedIn, where I drop the deep dives that I can't share here. But if you're serious about fast tracking results, book a one-on-one session with me and consultation and grab my ebook. It's packed with everything you need to know to get started right here, right now, in the right way. Link in the bio for all that stuff. Remember, poor is a choice, wealth is a choice. Every single day you get to decide what you're choosing today. It's a mindset too. So let's build that wealth. I'll see you in the next one.